Welcome to the Tech Egg. Don't get scrambled. Enjoy the video.
In this video, I will explain how to prepare ledger accounts step by step. We'll start by understanding why ledger accounts are crucial for organizing financial data. You'll learn to identify different account types, like assets and liabilities, and grasp the core principles of debit and credit. This foundational knowledge is essential for accurate accounting, helping you track every financial movement with precision and clarity. Before posting to the ledger, every transaction must first be recorded in the journal. This involves analyzing each event to identify which accounts are impacted and by how much. For instance, a cash sale would debit cash and credit sales. You'll learn to apply the debit and credit rules consistently, ensuring that every entry maintains the accounting equation and provides a clear audit trail. Once transactions are journalized, the next step is posting them to the individual ledger accounts. Each debit in the journal becomes a debit in the corresponding ledger account, and similarly for credits. Remember to always post debits on the left side and credits on the right side of the T account. This systematic transfer helps categorize all similar transactions, providing a clear, summarized view of each account's activity. Finally, after all transactions are posted, you'll balance each ledger account by summing the debits and credits to find the closing balance. These balances are then used to prepare a trial balance, a crucial statement that lists all account balances to ensure total debits equal total credits. This step is vital for identifying any mathematical errors before moving on to preparing the final financial statements, ensuring accuracy in your accounting records.
Thanks for watching. Consider subscribing if I helped unscramble your problems.